Hello and welcome to our SalesFuel and BIA Advisory Services 2021 Digital Event Series for August. Welcome everyone. Our topic today is insurance and mortgages. Welcome to all of you. I'm Audrey Strong. I'm the Vice President of Communications here at SalesFuel, and I am your host today. Our panel consists of Mark Fratrick, Senior Vice President and Chief Economist for BIA Advisory Services, and Celie Smith, SalesFuel's President and CEO. We've also got SalesFuel's Director of Client Success, Adam Ambro, on deck today running our slides. Thank you, Adam, for helping out with that. So today's discussion will be the insurance and mortgages ad projections for this year, market trends and the second half projections for 2021, digital selling strategies, the subvertical analysis of auto and direct property insurance, direct health and medical insurance carriers, insurance agencies and brokerages, and consumer lending and mortgages. We also provide a digital handout with some additional data points as a thank you for you registering and attending the webinar. Okay, some quick housekeeping to be mindful of before the gentlemen take over today. If you are having any technical issues right now, I would like you to email webinars@bia.com for help. In terms of questions, please type your questions in as you have them. Questions not answered today live, we will be able to answer post-webinar for you. And like I said, you're going to get that local digital resource full of data and insights into the verticals for the entire series for the year. And finally, watch your email inboxes tomorrow. That's when we'll be sending everyone the links to this recording, the slide deck, and that handout. We have a short survey at the end of this webinar. We'd like your feedback on how we did, so please fill that out. Thank you in advance. And now it's my pleasure to turn things over to Mark. Take it away, Mark.
Thank you, Audrey, and it's a pleasure to be here. Next slide, please. We're going to quickly talk about the insurance and mortgage industries, what's going on in those particular industries. Obviously, the dynamics and the economics of those industries drive the advertising spend. So let's take our first look at the life insurance. Next slide, please. Okay, in life insurance, the COVID-19 outbreak led to a big boost in life insurance activity, but not right away. It wasn't until the end part of the year, where it actually rose. It actually rose 4% in 2020, the biggest full year increase in over the last decade. What's more, growth in 2020 was largely driven by those under the age of 44. Probably believing their mortality was a little threatened, followed by the 45 to 59 age group as well. This is interesting because, as you'll see later on in the advertising data, we'll show you that a lot of the digital advertising platforms were used a lot in 2020 and expected to continue in 2021 as a result. So it isn't surprising that those digital platforms were utilized given the target group that they were going after. Next slide, please. Turning now to auto insurance, had a significant influence over many of the auto insurance policy ecosystem, claims and driving behavior. Policies were up even though there was a shortage of automobiles during some of that time. Part of that uptick could be to the ease in visiting DMV virtually. You didn't have to go there. Other reasons is that premiums went down because of the lack of driving. So a lot of activity occurred in 2020 in auto insurance. Next slide, please. The last category is with mortgage rates. Mortgage rates significantly decreased due to the lack of activity some in 2020, but started picking up a little bit. And these lower rates and these higher prices for houses that went up during the last few months led to significant increase in activity of mortgage rates. And one of the interesting things about the mortgage industry is its use of online applications. on apps to actually do the application, and you'll see that had a pronounced effect on the advertising platform. Next slide, please. So let's turn to the actual advertising spending. Here is the total for the entire financial and insurance general category, this vertical, which includes a lot of subcategories, some of which we're going to go into. Obviously, it saw a big decrease in 2020, but it increased substantially in 2021 as the economy bounced back. Next year, we continue to see increases in all of the various verticals, and I'll point out to many of the BIA Advantage clients that are on the call, we're going to be coming out with our new estimate in the next week or so, and we are already beginning to see some increases in our estimate. With respect to where the vertical these companies are spending, next slide, please. Overall, direct mail is very big there. Mobile is actually the biggest there. Direct mail gets less than a quarter of these advertising spending, with mobile just around slightly more than that. And this increase in mobile has been pronounced over the last few years. And when we go into each of the actual verticals, you'll see the reason why I think they have been using the digital platforms as a result. I would point out that radio, both over the air and online, gets around an eighth of the market, and TV and online will get a little bit over a 12th, around nearly 8%. So they're still important parts of the overall advertising mix, even though there's a very strong movement to more digital advertising platforms. So next, we're going to turn to the various sub-verticals, the auto and direct property insurance, as well as some of the other verticals. This auto and direct property insurance is one of 95 different verticals that we track at BIA, and we continue to add verticals as they become more and more important. Next slide, please. With respect to auto and direct property insurance, over $4 billion gets spent across the various radio and television markets, and mobile gets the largest share of it. Once again, I think in some sense it's because they want to target some younger people, and as they enter into the auto and direct property insurance marketplace. On the other hand, radio and TV still get a decent amount of share, and they do get, and they're important parts of the advertising mix. Brand awareness for both TV and radio is a very key, one of the very key aspects of the advertising mix. Next slide, please. So overall, traditional advertising platforms, slightly more than half of the total amount spent, the $4.2 billion in 2021, to slightly over $2 billion is spent in digital. And as you can see, it goes across a large amount of it is being spent in search, and that doesn't surprise me when we provide that information, just because people will search and say, okay, what auto insurance companies are making deals, and what direct property insurance companies are making deals. So search is a very big key component of the digital spending, Google AdWords, et cetera, et cetera. Now I'll turn it over to Lee.
Thank you very much, Mark. It's great to be with everyone again for this webinar. And let's go ahead and go to the next slide, and we'll talk about some of the trends that are happening in the industry. You'll notice by the picture here, of course, one of the trends is really stupid television advertising, and of course that gets then moved over into print. And there's an example of one of them. But 41% of auto insurance holders were shopping around for alternatives at the end of 2020. This is the highest rate ever seen. So there are a lot of potential customers in the market. And this is a key point that I'll emphasize twice actually today. 45% of auto policy holders are willing to switch companies for a savings of less than $200. So there's no loyalty here. There's an opportunity to save money. That's why the Geico pitch, for example, 15 minutes can save you 15%. Yeah, that's what it's all about. It's about saving the money. Now, another great area of opportunity is growth from RV insurance. And as you're seeing more young folks and purchasing campers and pull behinds and RVs and everything like that, well, there's an opportunity there because those need to be insured. And also when it comes then to automotive usage-based insurance, which has already been used frequently by fleets, it's being adopted more for personal lines by safe drivers and by small businesses. So plug in that little device into your car or whatever, and safer drivers get a better rate. The other thing that we're noticing there is there's an insurance company here in Columbus, Ohio called Root Insurance, ROOT. And they are actually they're not looking at demographics or anything like that. You download their mobile app, you turn it on, you go driving, and then it can actually tell behind the accelerometer then, and by the GPS, how fast you're going, are there any sudden stops, anything like that. That gets factored into their algorithm and actually gives you a rate for your car insurance. So it's an example of one of those high-tech kind of companies then that seek to disrupt the automotive insurance industry. So on the next slide, we're going to take a look at some of our audiences. And this is one of them called Auto Insurance Switchers. It's one of 1,400 audience segments then that we survey in our proprietary research called AudienceSCAN. And this is the 12th annual study that we've just released the data to our Admiral subscribers this week. And we're doing it without much fanfare. We want to make sure that everything is working properly. So what is an auto insurance switcher? These are people that we've asked them the question, do you have dissatisfaction with your auto insurance carrier, and is it a goal of yours to switch to a different provider within the next 12 months? So this is that audience, and 37% of them already have a name in mind when they begin to search for a business online. So this goes back to the traditional days, the traditional methods of top of mind awareness. So before they search, they're already searching for a Geico, a Progressive, a Liberty, Nationwide, you name it. My apologies if I didn't say the name of your favorite insurance carrier, but so that just shows how important it is then to do regular brand type advertising that you'll see on the traditional media and elsewhere in digital, so that they already have that name in mind, so that when it comes time for them to actually do the search, the Google search and like that, yeah, they're going to see the Google listings, but in many cases they're already searching for a name in mind. So on the next slide, we're going to talk about then how to take advantage of these auto insurance switchers. And one way is when you're proposing digital advertising, to make sure that you hit the women, 25 to 54 audience. That's talking demographics now. It's because this group is the most likely to want to research on insurance online and purchase policies online. But don't sleep on seniors, because this might seem a little counterintuitive, but that's what makes it useful. Is that adults 65 plus who seek insurance information online is nearly doubled recently. And so you want to promote the life insurance for them, as well as RV and boat insurance. And another way which you might be able to then help your auto and property insurance carriers to help them recruit for the digital sales rep. So this is because many carriers are still hiring insurance reps based on their ability to build in-person relationships and who they know and who's in their contact list and everything like that. And the thing is, as we know from COVID, the world has changed. So it's in personal relationships, sure, that's important, but it's also important for how well can they connect with somebody over a Zoom call, and how well can they connect with somebody through an email or a text message, or video sent by email. So help them recruit for the digital sales rep. So that actually allows for recruiting advertising then to be a good play for you. So let's move on to the next sub-vertical. Next slide. Oh, actually, no, we're not. We're going to kick it back over to Audrey for questions and answers.
We have questions. So, gentlemen, you guys can tag team on this. Somebody asking, is mobile considered mobile display ads? That's the question.
It's not only mobile display ads, it's mobile video ads. It's also mobile search. If you are using your mobile device to search for the local auto insurance company as well.
Excellent. And another question, is there data on the brand awareness in other insurance fields other than auto?
Well, there certainly is in the fact in ad malls, like we have life insurance, we have property insurance, we've got, and you'll be able to go in and take a look. You can look at the switchers, you can look at the people then that intend to buy these insurance brands and everything like that. So there are some additional data there. Like we do not have it broken out, however, by specific brands about which brand do you use. We do not have that information yet. However, we do have some of that information in our local account intelligence reports, and you want to check that out. And also major account intelligence reports, we actually have some information there as well.
Superb. Let's go ahead, Adam, and move on to the next sub-vertical.
The next one is direct life insurance carriers. It's another part of our financial insurance vertical. Next slide, please. Direct life insurance carriers, their spending is slightly less than the auto insurance. They don't, I guess they don't switch it much. Here again, it's mobile getting over 27%. And as I mentioned earlier, a lot of the interest in life insurance was with the younger cohorts. And so I think that's really not surprising to see mobile getting a larger share of this spending as those brands and services want to target those younger demographics. Not to say that older people don't have mobile devices and utilize them as well, but obviously younger people tend to use them somewhat more. Next slide, please. Then also not surprisingly, digital is more than 50% in this vertical, over nearly $920 million. And once again, I want to point out that search is still an important part of the digital ad spend. Buying Google AdWords and buying other search engines is very important for the brands in this vertical to reach people, and obviously display and other digital ad platforms are equally as important in this marketplace. Next slide, please.
So not only do you have a great opportunity with life insurance, but also health insurance carriers also represent an opportunity. So let me go over some market trends and some ways you might be able to tap into that. Consumers who put off care last year are returning to providers now, so the claims will cost health insurance companies more in the latter part of 2021 and 2022. Demand for telehealth will continue. It was a necessity during COVID, but now we like it. So that's going to continue. And while it's convenient for patients and healthcare providers, and insurance companies are struggling to rein in the cost of telehealth. So that's an issue for them. And as the costs related to treating COVID-19 patients rise, it's still out there. Health insurance companies are rolling back waivers, and that means that patients are now going to be paying more out of pocket than for these types of treatments. And also, we've seen that some companies are now beginning to offer more mental health care benefits. And as an editorial comment or whatever, it's about time. Anyway, moving on to the next slide. Let's talk about those telehealth users. These are 21% of them have used this feature in the last month. And 23% of telehealth users have responded to an audio podcast ad in the last year. Great opportunity for our radio clients out there. So tapping into the market then for health insurance on the next slide, we'll talk about sponsored search results. These are a top priority. So if you have television plus print advertising in newspaper circulars and direct mail, especially among those American 65 plus, these are the things that are often used to create a media mix along with digital advertising, and they work in tandem with each other. You want to match campaign time into open enrollment periods. So these will typically start November 1st. Certainly the one for the Obamacare will certainly start on November 1st. The end date will vary from state to state, however, and so keep this in mind. Market affordable coverage for Hispanics. Why? Because 27%, over a quarter of this ethnic group lacked health insurance in the year 2021. So there's an opportunity there. And one of the discovery questions you could ask is, do you allocate marketing budget for direct-to-consumer education programs such as smoking cessation or getting over treatment for opioid addiction, things like that? This can lead to additional sales and revenue from health insurance carriers throughout the year. So another opportunity there. Let's move on to the next subvertical after we take your questions.
That's right. We have
I'll
a question.
get this right eventually.
We have a gentleman who is asking for more of a definition of the financial umbrella, wanting to know if it's just mortgage or does it also include in the data banking and the highly compliance regulated financial advisors category?
Yes and yes. We grew financial insurance into one large vertical and then go into 9 different sub verticals, and there's banking, there's brokerage, there's securities advisors, there's a whole host of different number of financial insurance, as well as the various insurance verticals that we just went through.
Perfect. All right, let's move along. We want to make sure we keep the train on the tracks and running.
Sure. And now we're going to talk about insurance agency and brokerage, which is a good segue from that question. Next slide. This is a smaller vertical. It's only 225 million, but we shouldn't neglect that, and especially because TB gets the largest share here. And this is not surprising to me because a lot of these insurance agencies and brokerage are trying to get some brand awareness, trying to get some image out there in the marketplace to potential clients for them to frequent them. So you do get over a quarter with TV over the air, followed by mobile again and online. Direct mail is also always very significant there, and radio is the 4th largest advertising platform for this vertical. Next slide, please. Here, because of the brand awareness aspect of this vertical and their desire to get more brand awareness and attracting customers, traditional has 60% of the total amount spending, though digital has been increasing, and you saw mobile was a very large percentage. So over $89 million is provided in there. And I'll point out that video display in this vertical is actually larger than many of the other verticals we've shown before. So video display being a better way of the brand awareness type of incentive for these verticals to get their word out. Next slide, please.
So a little bit of potpourri here with your local agencies, but a great opportunity because they're local and they have the buying decisions made locally. So as the home insurance buying has increased, so has the market for property insurance coverage. Again, I'll mention that auto insurance, people are looking to switch for just a little bit of savings. But keep in mind that only 52% of adults in the US currently have life insurance. That bears repeating, 52%. I was like, that is mind-boggling. Over nearly 1/3 of consumers say that COVID-19 concerns have made it more likely that they will purchase life insurance in the next 12 months. And well, consumer expectations are increasing. So what they want from your agencies, they want quicker transactions. And they also, though, will want to work directly with the insurance providers. So that makes things a little bit interesting for the more traditional, face-to-face, in-person local insurance agents. So it's really important that they try to improve their customer experience digitally wherever they can, then to keep them from wanting to go work directly with the insurance providers. On the next slide, we'll talk about some of our AudienceSCAN data, and this one is for home insurance switchers, for people that are dissatisfied with their home insurance provider and looking to make a switch in the next 12 months, that potential home insurance switchers are more than twice as likely than the average US adult to check a company's blog to evaluate their expertise and subject knowledge. So great opportunity for content marketing, services to be provided then to your local insurance agent. To make sure that they're out there as a subject matter expert and as a trusted and reliable source of information. On the next slide, we'll talk about then how media sellers can get after insurance agencies. And here's a couple things to keep in mind. The average insurance agency, which has revenue under $5 million, they'll employ one full-time marketing person. The larger agencies, those above 5 million, will employ an average of 4 staffers in the marketing departments. Again, a lot of insurance companies provide co-op advertising programs, so use the co-op advertising funds to expand the marketing budgets. And review the agent's website and mobile experience. More than 8 in 10 of consumers believe that a firm's digital experience is either somewhat or very important when they're considering doing business with a particular insurance agent. Proposed video marketing. Only half of the most sophisticated agencies are using video. And for everybody else, it's about 12% of the not quite so sophisticated, big, larger insurance agents. So there's a great opportunity to build face-to-face connections and familiarity where the in-person meetings may not be quite as easy to do as they have been in the past. And again, we're talking about keywords. Mark mentioned the importance of search. Make sure that you add the local community names to keywords, because again, we're talking about local insurance agents. So you got to get the names of those local communities, not just the city, but also then the suburbs as well. Because those who want to work with an independent agent rather than bundling directly through an insurance company value that local connection. Let's go on to the next. After your questions.
I love it when several people all ask the same question at the same time. Okay, so here's what they're wanting to know. Any advice on helping health insurance agencies generate leads and awareness from Medicare consultations? There is a small window to target these users as they reach that age. We were thinking video and targeted email might be a good place to start. Opinions, gentlemen?
It certainly is. Of course, SEO, absolutely. Search engine marketing with the Google AdWords, absolutely. But the video makes absolute sense, because it can be there's a lot of questions, a lot of uncertainty there among the buyers, and so whoever can go in there and clarify that and clear things up, then for the buyer definitely has a leg up as a subject matter expert, as somebody then that they may want to pursue a purchase relationship with.
Mark, any thoughts?
Yeah, I would just agree with that. I mean, insofar as using search, and I like what Lee was saying in his previous slide about having a local aspect in the search words. I think that's really key in developing successful campaigns for your clients.
Another question, why does direct mail still have such a large share in all of these verticals? I know, Mark, you talked earlier in the presentation about it shrinking a little bit, but still relevant.
Yeah, everybody always is surprised by that large percentage slice, and sometimes a quarter, sometimes less than that. It includes all the direct solicitations, and retail. It also includes catalogs, and it also includes the Valpact and of the world. And while everybody says that the direct mail doesn't even make it into the household, it makes it into the garbage can every day, I will point out that you get it every day, and that the success rate is not very high, but at the percentage, but that it's still beneficial for banks and financial institutions, insurance companies, all the types that we'll be talking about today, to use direct mail, because you can provide a lot of information in a very easy to read form in direct mail if the customer opens up that envelope. So while we always poo-poo it insofar as, oh, it can't be so high because I never read it, you get it every day in the mail, and there's enough people reading it and acting on it that financial institutions and insurance companies and banks continue to utilize that advertising platform.
A couple of observations from me and a snarky remark, because you can always count on me for that, is that, being in print, because we're talking about insurance carriers, so there has to be a certain level of trust there, and being in print actually then gives a much greater level of gravitas and credibility. So that's important. The snarky remark would be, there's a lot of fine print involved with this type of advertising, these types of policies. So it's like, if you need to cram a lot of small print in, it's kind of hard to do that in a radio ad. Even if you speed up the speed of the announcer or whatever, they'd be talking a mile a minute. It's still tough to cram that all into a few seconds, but you can put it into print very easily. And the last thing is what I say about with retailers and preprints is, like, they wouldn't keep spending the money on it if it didn't work. So, it does work to some degree. You might question it and everything like that. You might think you've got a better answer, but it does work to some degree. And that's why, despite all the great digital offerings that we have that have that accountability that you can point to and everything like that, it's like, I don't see the numbers and the percentages for direct mail, slipping, very quickly. I mean, it's a very slow decline. And so that speaks to something.
I fish it out of the mailbox, and if I'm interested in it, it goes up on my fridge with a magnet, and then when I need it, I have it. So there you go. We have plenty of time, guys, so we actually have another question. It said that potential home insurance switchers are twice as likely to look up a company. Are there data on the percentage of homeowners who are part of the potential group? So if you slice it even further, do you have that?
Well, I don't have that at the ready right now. However, we always have Kathy
Right.
Crissett, who's our vice president of research, and she's always listening to these webinars. So like she's probably scurrying right now, crunching data and running a bunch of calculations and everything like that to get me
Yeah.
information. So,
But
whenever we
we
get
can
that
pull
information,
that, yes.
yeah. When if we don't get that information by the end of the webinar, it's like, we'll take your name and your email address, and we will send you that information as we get it.
Absolutely. Okay, let's move on.
Next slide, please. And now we'll turn into our last vertical, consumer lending and mortgages. And in some sense, it's a sort of contrast to what we've been talking about here. Consumer lending and mortgages, over $2 billion going to be spent in this year and increasing by next year. And mobile gets more than a quarter of all the spending, almost $560 million. And it isn't what's driving a lot of this is, as we mentioned earlier, about the low interest rate and the significant house buying, but also a lot of younger people are getting into the house buying. And it also is significant as they utilize mobile devices to a greater extent. And as I mentioned earlier, you all know the names of the various mortgage companies that advertise significantly and advertise their ability to provide for you to apply online and get your results really quickly about that. So the idea that they have that ability to apply online is added fuel for these companies to use mobile advertising platforms, because then you can click to applying online. So it doesn't surprise me to see that mobile is significantly higher than even direct mail in this situation. Next slide, please. And as a result, digital platforms get more than 0.5% of that. A lot of display ads are utilized in that 1.1 billion in digital ad spending 2021 to advertise the ability to get these mortgages, have these low rates. Everybody has seen the ads about if your rate is above the 3%, you can save hundreds of dollars a month in that type of advertising. So display advertising is still utilized significantly by the mortgage companies as well as other players in this marketplace. Next slide, please.
So this is a situation where the market trends are changing, month to month. So after months of a tight squeeze, now builders are now starting to catch up on their projects, and there's a bigger supply of homes on the market now. So maybe things will get a little less crazy in the weeks ahead. While the refinancing applications are lower than last year, refi still makes up over 60% of the mortgage market right now. So, that's where the advertising messaging is going to be. The days of the sub 3% mortgage interest rates appear to be over for now, but who knows? Fintech solutions, and here's another one, another Columbus company it's called lower.com. And this is an example of what Mark was just talking about earlier, where you can actually do a complete refi on your mobile phone within minutes. So they will still follow. They'll give you the rate. You'll click the button, then they'll send you paperwork, and you'll sign it. You'll take care of that digitally, and it's way different than traditional lenders. And some of these fintech solutions then are starting to pose a real challenge for them. Tech-savvy consumers, the ones who are using things like this, they expect complete online ease during the application and approval process. There's API integrations into their banking and their investment information. API integration just means one computer talking to another computer and sharing information. So that's what's happening in this particular market. Now, when we talk about the audience here, it's like these are the folks then that they have refinanced their mortgages. And so on the next slide, we'll talk about the digital audience there. 44% of mortgage refinancing clients have taken action after seeing a streaming TV ad in the last 30 days. So OTT is a great opportunity for reaching this particular audience. And again, this is brand new information from our AudienceSCAN study that just got published this week on admall.com. So let's talk about how media sellers can take full advantage of this. On the next slide, recommend content marketing. Position the lender as an authority in the mortgage industry. Use guides to create lead generation. So it's a matter of just like a white paper. These are guides then for consumers to help them make sense of everything, to give them comfort as they navigate the buying journey. Consider interactive mortgage calculators. Those always work. It's like, before I go invest any time, I actually want to see, what could I possibly save here? What would my rate be? What would my monthly payment be? Use video and social media in your proposal. Explainer videos aimed at millennials. It's like, Mark mentioned then that more people entering the housing market for the first time. Those are millennials, and they're more likely then to buy the starter home, so not the brand new home. But explainer videos aimed at that market have been used effectively in video or with videos on social media. Couple discovery questions you could ask: what type of home buyer accounts for the majority of your business, and how are you using technology to set yourself apart from other mortgage lenders? Audrey, time for questions.
Yes, we have a couple more questions that have come in. What are the financial aspects of the subprime or non-prime mortgage market? Any thoughts on that?
Obviously, that was a very big aspect of the 2008-2009 recession. I think the lending institutions are becoming more and more careful because of that experience to not be as leveraged as they were before. But I suspect that there will possibly be some sort of bankruptcies over time if the economy does downturn, which we don't expect anytime soon. But I don't think it had too big of an impact on the companies, because the ones that we are talking about that spend heavily on media are more established players in the marketplace.
Lee, any thoughts?
Well, I mean, Mark, I was curious about for those of you who are not familiar with this, how would you define the subprime mortgage? I mean, what makes that different than your traditional mortgage?
It tends to be people who have lower credit ratings, who obviously have lower income, insofar as that they're more risky borrowers, and obviously during the early 2000s there was a big push to get home buyership more expanded among many different groups, and that was actually a policy of the U.S. government, and that led to people who probably shouldn't have been buying homes during that time, and so it's more risky borrowers.
And they'll pay a higher percentage rate, and they'll also be asked to put more money down, because of that.
Well, they typically don't have a lot of money to put down, but they will be paying a much higher interest rate.
Yeah.
Yep. Couple questions about digital advertising. So the first one is, it's interesting to see consumer lending and mortgages have such a high percentage for digital advertising platforms. Why is that?
I don't want to repeat myself too much, but I think it's a large part of it is that digital advertising is are advertising platforms that can target demographic groups very distinctly, and thus you're trying to get to younger people who utilize mobile and online devices more than older people, though older people still use them. And so you go where your customers are, and so you utilize those digital advertising platforms to reach the customers that you think are more likely going to possibly investigate your company, your service, and utilize and as a result spend more money in that area. I don't know if you want to add anything to that.
Yeah,
Lee.
well, the industry is going online, so that's what consumers want. But because, as you mentioned, they're more tech savvy. But it's like, this is not where you would go to your mortgage lender or whatever, and you sit down at a desk and you'd fill out a bunch of papers and everything and you'd wait for a while. Everything like now, everything is done online more quickly. That's where the industry is going. Certainly all those advertisers then, of course, are advertising online, where you can just, when you click through, you're actually going to go to their site and they can turn around a mortgage loan, I mean, pretty quickly. So as the industry goes, then the advertising is certainly going to go in that direction as well.
That's very good. That concludes our questions. I don't have any more to share with you. We can move along if you'd like.
Okay.
We have some more information for you. So like I said, we're going to be thanking you for attending the webinar today and every webinar in this series with this resource of vertical analysis, data and insights. We update it each month. We've updated it again this month. So we're going to give that to you tomorrow when we send out the deck and the recording. Our series, next slide, Adam, is going to continue actually in November. So we're going to take September and October to get ready for forward thinking into next year and prepare for November's webinar, which will allow you to plan ahead for 2022. Myself and the good team over at BIA, we will be in touch with you about registration links for that, and we hope you'll keep an eye out for it. But trust me, we'll get it all sent out to you. And in the meantime, you can view all the series replays at the link at the bottom of this slide. When we send you the deck tomorrow, you'll have that little bit.ly, and you can kind of, if you missed any of these earlier in the year, it's all there ready for you to take in. And Mark, you've got some information on BIA.
Yeah, next slide, please. All the data that I've been talking about in terms of advertising spending is the nationwide total, but we provided for every local TV and radio market 95 different sub-verticals. We're just adding actually online gambling, for instance, as a new vertical. And this is available to our clients in our Advantage product. You can get into a lot of information, a lot of strategies there. So I encourage anybody, if you have some interest in that, we can give you a demo. Won't take very long to just go to Advantage at BIA.com and check out our overall website insofar as the information that we have available, both in this area as well as various other areas.
Thanks, Mark.
Next slide.
Yep, next slide. And if you like the research that Lee mentioned, and you can get it 24/7 with AdMall, if you're not one of the more than 15,000 sales professionals using AdMall, you're left out. Come on, get in with the program.
Competitive disadvantage, yeah.
That's right. If more information, and our Denise Gibson will give you a fabulous demonstration. And so again, we're at admall.com. Come and check it out. Also, we have a couple other things that we have going on. We've got a product called Coach Feed. If you're looking to improve your salespeople 2 minutes a day, get Coach Feed. It's sales micro coaching through Slack or email. We have a free trial right now at coachfeed.com. Also, we know that there's a lot of job openings out there. You may have some yourself. If you're looking to hire more salespeople, consider a demo of SalesFuel Hire. It's the BS detector for hiring salespeople. I don't know how to be more blunt about that, but it's backed by science and algorithms, and salesfuel.com/hire. We are at the ready to show you that. Don't make a hiring mistake. It'll cost you a lot of money.
And the other thing too, Audrey, it's a lot of folks in this industry in particular. It's like, it's one thing to evaluate the applicants you've got coming in, and it's really important that you do that, because you don't want to get desperate, where it's like you've got to fill an open position, so you're just willing to take whoever can fog a mirror. That's where a lot of mistakes are made. When you lower your standards or whatever just to get the job filled. But the other issue that a lot of media companies are having, that they're sharing with us, is like, we're not getting the applicants in. So we're not getting enough people to choose from. And so what I might suggest is another way to use SalesFuel Hire is to take a look at your own internal applicants, your own internal staff, because your next great salesperson might be right under your nose and you may not even know it. They might be on your sales team functioning in a different role, maybe as a sales assistant or something like that, or they could be in another department. They could be in marketing, they could be in customer service, they could be in subscriber services, they could be in a newsroom for that matter. And it's like, so keep your mind open then and actually take a look at people internally that are really great with working with customers, really great at helping people, really curious as far as helping to understand another person's situation, because that's what you want in sales. And you can use SalesFuel higher than to get those people into your candidate pool.
That's a great point. Yeah, thanks, Lee. We have a webinar survey now that we're closing things out. We like to get you out on time so you can get on to your next meeting or your lunch break, depending on where you are. So please fill out that webinar survey. If you have questions, you can reach out to me, Audrey, or Mark. Both of our emails are in the deck. And I just want to thank you all for attending and hope this has been of value to you. And I wish you a great rest of your day. Thank you, everyone.